All right, so welcome one more time. In our last video, we look at how to compute, that is, calculate our personal income tax, and we dwell much on the salary account computation. So today, we'll be looking at the one that is not salary, that is, the non-salary computation calculation of personal income tax. So for non-salary individuals, who are the non-salary individuals? Number one, people that are not on any payroll, you understand? And then number two, people that are earning, some monthly, fixed monthly salaries, but they are not on payroll. You understand me now? People that operate personal bank accounts, people that earn income from other sources, like freelancing, consultancy, landlords, influencers, traders, professionals like lawyer, doctors, engineers, mechanic, all of tailor, fashion designer. Call yourself whatever you are doing, whatever you are earning, whatever you are doing, and then you are earning money. You are known as a non-salary individual. So, as a non-salary individual, you have what we call your personal account. That is your where you put in your money. It can be in any of the commercial bank, or in any of the fintech like Pay, Palmpay, and the like. So anywhere that you put your money, that's personal account. Then we have what we call the business account, where for instance you register a business name. As a business, if you register a business name, you are known as a sole proprietorship. So as a sole proprietorship, or you're into partnership, you are still under the non-salary individuals, because you are into a business, and your account are going to be taxed. So understand this, basically, that you are a non-salary individual when your name is not on any payroll as an employee of an institution, and you are being paid monthly salary. So that is that for that. So now personal account matters because under the new tax regime, bank transactions are duly monitored. And so inflows without salary explanation are always treated as income. That is, whatever that comes into your account as an income, as money that comes into your account, they are treated as income by tax authority, except where duly narrated. I did a video on how to avoid being charged unnecessarily, and I talk extensively on proper narrations. If you don't have proper narrations, I pity you. And so whatever that comes in will be treated as an income. We also have the lifestyle, they match it with what you declare as income. For instance, now if you are declaring an income of let's say 1 million naira in your account, and you have 5 cars, you are living in your own house, you understand, you are under declaring. So the tax authority will actually watch your lifestyle and match it with what you declare as your income. And so also unexplained credits may always also trigger tax assessment. What we mean by that is when you have inflows, credits into your account, the tax authorities have the power to assess you and check you. So that you are not earning salary does not mean that you are not going to pay tax anymore. That era will end on 31st of December 2025, where a lot of persons in Nigeria are just trading and doing business, and they're not paying taxes. And then that makes government to be borrowing money excessively. Don't blame me, I'm just talking my own. So that's that for that. So what are the sources of income for non-salary persons? Your business profit, professional fees, landlords that rent, houses out. You are earning money. You collect money from rent from people, and then you are not paying tax. No more. Commission income, digital income, like all this cryptocurrency, Binance, what is it called? Or I don't know. All those digital money are going to be taxed. Investment income, where it is applicable, because investment income are actually tax exempt. But if they are not properly narrated, they may be taxed. But if it's investment income, that is, for instance, you have an investment in another company, and then they pay you, it is a tax exempt, except if you pay withholding, withholding taxes on it. So that is that for that. So now, before we go further, I was mentioning that we have what we call the personal account, and then the the business account. Your personal account, they are the one that belongs to you, that is registered in your name. Usually they used to be in a savings account, whereas some other commercial bank also operate your personal name under your current account. But I don't know if they still do it though. But I used to know that they only allow personal account to be under savings account, while business name are for current or corporate account, as it were. So if you have a personal account in any of the banks or the fintechs, OPay, Minini, all of them like that, that's your personal account. That will be duly monitored. As a Nigerian, you have what we call national identity number, or you have TIN. This will give access to the tax authority to know the numbers of banks that you are operating. And so whatever that they see there as an income, if it is not properly narrated, please, it will be taxed. So go and watch my video on how to avoid unnecessary taxes, and then learn more. Then you have what we call the business account. Business account, they are the one that are registered with CAC under business name. You understand? Under business name, whether a sole proprietorship, that's one man business, or limited liability, partnership, as it were. So either way, you are going to pay business tax. Now the difference between these two is this: for personal account, whatever the income that the tax people see in your account, they will add it up together and they will apply the tax rate, the bands and the tax rate, they will apply it on the income. Whereas for business account, the tax will only come on what we call the taxable profit. In other words, you are going to keep your proper record of your income and then your expenses, and then what you have at the end of the day, which is your profit after tax, when being adjusted by a tax authority, becomes taxable profit, and that is what is being taxed. But the question is this: how many business owner, how many people that are running business have opened a business account? If you have opened a business account, how many of them are keeping proper records? How many of them? So there's also a video on running a business account, what you need to do. There's a video on that. Please, we'll go and watch it. Please, it's very important. So that is that for that. So how you are tax charged on personal account as well as on what is it called, business account. So now, what are the allowable deduction on personal accounts? You see, we have what we call cost of goods sold, rent of shops, utility use, transportation, repair, maintenance, pension contribution. That is when you have a voluntary pension contribution as business owner. All of these, they are allowed to be removed from your earnings, what you earn from the business. So you are going to prepare what we call an income statement, that is your statement of profit or loss for the year, and then you file it with tax authority. You can as well pay your tax based on what you have computed. Pay your tax, and if the tax authority are not okay with what you pay, they will as well charge you, as it were. So that's that for that. It's as simple as that. So what I'm saying is this: let's assume that you have 5 bank accounts. Let's start with a personal account. Now you have 5 banks account with your TIN, or NIN. We can know all the banks that you own. So all that we need to do is to check whatever it is that you have as an income inflow. You understand? In the whole year. So what you have as an inflow is the whole year. That's what the tax authority will check. So if there are no proper narrations, please go and watch that video. If there are no proper narration to say, okay, this one is gift, this one is loan, this one is refunds of loan or repayment of loan, or let's assume that it's a gift, Christmas gift to you, they will take it as an income tax. So whatever it is that is being reviewed, and they saw your they started in your bank statement. That is what will be considered as taxable income. So check inflow in the whole year to determine taxable income. So that's that for that, to determine taxable income. That's it. So let's assume that you have 5 bank accounts. Your 5 bank account throughout the whole year, we check and we saw 3 million as the whole income. Just assumption now. Uh, so if it's 3 million that we see now from this 3 million, your first 600,000 from here is not charged. Note that you don't have any relief. Well, you actually have a relief, and the relief is if you actually pay rent from that your personal account, and they are seeing it in your personal account that you pay rent, that amount that they see in your account that where you pay rent, they are going to take 20% from it as your rent deduction, as your relief rather. 20% of that amount will be taken, but it will not be more than 500,000. So, but let's assume that you're not paying from these 5 accounts. So now what we see as taxable income is 3 million. So like I said, 800,000 will be taken off. When 800,000 is taken off, in other words, it's not that the 800,000 will be taken off like that too. So but what I'm saying is the first 800,000 naira will not be charged. So if you remove 800,000 from here, you have 2.2 million naira left. Then also 2.2 million naira will be left. So this 2.2 million naira is what will be taxed. So the 2.2 million naira now will be taxed at the band of 15%. So 0 naira to 800,000 naira is tax exempt. Then from 800,000 naira to 2.2 million is 15% tax that is applicable. You understand? So but if we apply 15%, that means that 2.2 million multiplied by 15%, that will be equals to what? Let's check. 2.2 million multiplied by 0.15 means that you are going to pay 330,000 naira. 330,000 naira. That's what you are going to pay to the government. And the beauty of all of this is that they have not told us the modality. They may decide to be doing it on a monthly basis, check your inflows in 1 month, and then they tax you, or they will leave you from January to December. When it's December, they will check all your inflows put together and charge applicable taxes on it. And the beauty of it is this: whatever the tax authority they may feel as your tax liability, the law have empowered them to debit your account in that equivalent sum, and also put it on your dashboard for you to see under the tax the tax office that you registered with. It will be there on your dashboard. I also did a video on how to create your thing. It's better you create your thing, and so that you can have access to your dashboard. You'll be seeing everything there that they are charging you. So for someone that have 2.2 million naira as his gross, you are paying a whopping sum of 330,000 naira to the government. So prepare your mind, and that's the essence of this video. In the next video now, we have deal with the personal account. We are going to deal with the business account, how to do it properly. I hope I've been able to have some knowledge to you. Please subscribe to this video, share it with many people, let them also learn. That is the essence of this video. Thank you so much for your time, and please do chat me up in the comment section. Thank you.